Good morning, investors. You are now on KleverStock with me, Anunjarya, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. The FPM KLCI opened the week on a slightly firmer note, rebounding modestly after last week's heavy selling as fading expectations of a U.S. Federal Reserve rate cut in December kept overall sentiment cautious. At the opening bell, the benchmark index rose 2.57 points to 1,620.14, holding above its 50-day simple moving average, a signal that the market may continue to trade sideways in the near term. TA Securities said the technical indicators on the FPM KLCI remain subdued following last week's volatility. The research house noted that technical momentum and trend indicators remain muted, suggesting a range-bound trajectory with no fresh domestic catalyst. The market is likely to stay in consolidation mode as investors adopt a wait-and-see approach. Rakuten Trade observed improving participation across the broader market, supported by strong trading volume over recent sessions. Analysts said that this indicates investors are gradually returning to the local market. We expect bargain hunting to emerge and anticipate the benchmark index to trade within the 1,615 to 1,625 range today. Early top gainers included Nestle, up 20 cents to 112 ringgit and 20 cents, FNN rising 14 cents to 32 ringgit and 76 cents, and APM, which climbed 14 cents to 3 ringgit and 40 cents. Among the actives, Land & General edged up 1 cent to 15.5 cents, Panco gained 1 cent to 1 ringgit and 5 cents, and Catcher Digital added 2.5 cents to 34 cents. Moving on to local currency updates. The ringgit opened marginally stronger against US dollar on Monday, although overall sentiment remained cautious as mixed signals from US Federal Reserve officials kept investors uncertain about the greenback's near-term trajectory. At 8 a.m., the ringgit improved to 4.1435 or 4.1590 versus the US dollar, compared with last Friday's close of 4.1460 or 4.1495. Bank Muamalat Malaysia Berhad economist Dr. Muhammad Afzal Abdul Rashid said the U.S. interest rate outlook had become less clear following contrasting remarks from senior Fed policymakers. Afzal said that the Boston Fed president appeared reluctant to support a rate cut in December, citing mixed signals from the labor market and lingering inflation risk. Meanwhile, the New York Fed president suggested that policy is already restrictive, implying there may be room for a cut. He also added that the ringgit is likely to trade within a narrow range of 4 ringgit and 14 cents to 4 ringgit and 50 cents throughout the day. At the open, the ringgit was mostly firmer against major currencies. It strengthened against the yen to 2.6447 or 2.6548, and appreciated versus the euro to 4.7679 or 4.7858. However, it slipped slightly against the British pound, easing to 5.4263 or 5.4466. The ringgit was mixed against ASEAN currencies. It weakened against the Thai baht to 12.7649 or 12.8230, but strengthened versus the Indonesian rupiah to 247.8 or 248.9. It was unchanged against both the Philippine peso at 7.04 or 7.07 and the Singapore dollar at 3.1695 or 3.1816. Continuing with national economic updates. Prime Minister Datuk Seri Anwar Ibrahim has called on G20 member states to move beyond rhetoric and take concrete action to address long-standing global trade inequities, particularly those impacting countries in the global south. In a podcast interview with author and scholar Dr. Sizwe M. Fofu Walsh, Anwar said that although recent G20 discussion reflected an ambitious plan to expand consensus on multilateral trade and investment, actual progress remained limited. He said the bloc continued to fall short in closing economic gaps between nations despite its stated intention. Anwar stated that we have seen this very ambitious plan to get this sort of consensus, but in terms of the focus on multilateral trade, increasing mechanism, investment and ensuring that there are no glaring gaps between countries, it is still lacking. The Premier, who also serves as Finance Minister urged countries in Europe and the global north to use platforms within the G20 to address structural inequities that have historically disadvantaged the global south. He said unfair trading practices and exploitations of poorer countries' resources have gone unaddressed for too long, emphasizing that developing nations were no longer willing to accept empty commitments. Dato' Sri Anwar added that nations in the global south today are more advanced, much more astute and capable of defining their own development visions. While acknowledging the distance left to go, the Prime Minister underscored the importance of speaking firmly on the global stage. It is important that we come to some sort of consensus on this issue. There's a long way to go, but at least some of us should express ourselves in very strong terms. On Malaysia's potential entry into BRICS, Anwar confirmed that the country would continue with the formal process, noting broad support for Malaysia's membership, with major players such as South Africa, China, India and Russia all supporting our membership. We will just go with the process. He stressed, however, that BRICS should prioritize new growth areas such as technology and intra-regional trade while maintaining constructive engagement with the United States and Europe. During the 30-minute discussion, Anwar also addressed Malaysia's South Africa relations, ASEAN dynamics and Malaysia's economic and social policy focus. This year, G20 summit is the first to be held on African soil, with members comprising 19 countries alongside the African Union and the European Union. Moving on to corporate news update. YTL Group is exploring expansion opportunities in South Africa across independent power production (IPP), data centers and artificial intelligence (AI), according to YTL Power International Berhad Executive Director Yoh Kyung Han. Yoh said the conglomerate hopes to establish a presence in the country in the next year or two, but stressed that further feasibility work is still required. During a media briefing in South Africa, Yoh said that hopefully in the next year or two, YTL can establish a presence in South Africa. But these are areas where we will need to double down and conduct further research. He added that YTL's strength in energy and water infrastructure put the company in a strong position to support South Africa's ambitions in digital infrastructure. Beyond energy, YTL is also in discussion to support South Africa's water sector, leveraging the expertise of its UK-based subsidiary, Wessex Water, the highest-ranked water utility in the United Kingdom. Yoh also stated that YTL are talking to them about the possibility of not just building a single data center or supplying one large language model, but offering an end-to-end sovereign solution that can help South Africa. The Executive Director is part of the delegation of accompanying Prime Minister Datuk Seri Anwar Ibrahim on his tour to Ethiopia, South Africa and Kenya. YTL was also among the companies personally invited by South African President Cyril Ramaphosa to participate in the G20 following discussions held during the ASEAN Summit 2025 in Kuala Lumpur. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Mahsing Group Berhad is expanding its presence in the Stapa area with the proposed acquisition of 2.8 acres of leasehold land in Sri Rampai for 44.5 million ringgit. Ken Holdings Berhad Units St. Paul's Ventures Ltd is acquiring 9 freehold residential units in central London for £5.2 million. PPB Group Berhad's 18.8% owned associate Wilmar International Ltd has announced that its indirect 90.0% owned subsidiary Yihai Carry Arawana Holdings Co Ltd will be appealing a Chinese court ruling involving its subsidiary Guangzhou Yihai Oils and Grains Industries Co Ltd. Newly listed Insights Analytics Berhad Water Technology Solutions unit has secured a 11.5 million subcontract to design, build and operate a performance-based water supply project to address acute shortages in the Nibong Tada area of Sibu Division, Sarawak. Kumpulan Perangsang Selangor Berhad's 51.0% owned subsidiary Aqua Flow Sdn Berhad has entered into two separate framework agreements with Pengurusan Air Selangor Sdn Berhad for the supply and the delivery of chemicals to water treatment plants for a contracted sum of 78.1 million ringgit. Now that's a wrap for Moneyball Updates with me, Anujarya, on KleverStock. Thank you for choosing us investors. Stay tuned for the next live coming soon.